The AAA credit rating that Australia is maintaining, that's according to Moody's. How big a deal is that? I mean, there's a few different credit agencies. People might get confused by the whole thing, but what's your view of it?
Look, Pete, I think it's actually a very positive thing, and I don't think the other agencies will really dispute what Moody's have come out with. What it really means is that our level of debt going into the coronavirus crash was, international basis, very low, around 38%, even less if you net it, go to net debt. Also, they're obviously saying that the big rescue program, the biggest in the world at one stage, in terms of as a percentage of GDP, 10%, is not going to jeopardise our economic future. And they must be agreeing with some recent forecasts that the economic growth that's going to come out of all this is going to be good enough to make sure we can cover our debts. Because this is all about, okay, you've got debts, but can you service your debts very easily? If you have a fast-growing economy, you can do it. So it's an enormous slap on pat on the back for the Treasurer and the Prime Minister, in the sense that the whole rescue program has not jeopardised our economic future, and they reckon that we're a good risk, which means when we borrow money overseas, it's going to be at much lower rates than if we were really dodgy. So I just can't see anything negative about this at all.
Okay, now, are millennials to blame for this coronavirus crash rally? What's your view?
Pete, look, I think there's a percentage of contributors to all these novice investors, but they're not just novice investors. I think a lot of self-managed super fund investors are in there as well. And in the bad old days, it was basically the fund managers and the stockbrokers who were controlling whatever happened on a stock market, particularly when a crash came. Now, I interviewed some of the country's most well-known fund managers on my YouTube program, and they both said that the millennials have got in there and they've bought like there's no tomorrow, and this has actually pushed the rally up. Like in America, they're at 6 or 7% off their high before the coronavirus, and there's an app in America called the Robin Hood app.
Yeah.
Where basically
what is that? I've read it. I've been seeing that in headlines. What's Robin Hood?
It's an app that doesn't charge you a dime, a cent to do a trade. And so lots of young people are piling in, buying in the morning, selling in the afternoon, and that probably has led to a lot more froth in the market than usually is there.
These are young people after a fast buck, do you think? And does this come from, when the Bitcoin thing was raging last year, everyone was kind of jumping in on that. And because of coronavirus, right? So there's been no sport to gamble on, so people have moved to the stock market.
Pete, there's part of that in there as well. But I also think a lot of young people are frustrated that term deposits are so low, they can't get a deposit together to buy a home. Home prices are so high, they can't get in. And I think they've been brought up, with television shows on money, segments like this, stuff that, people like Kosh and Ross Greenwood and myself have been doing for years. All this sort of stuff has led, this generation is very money savvy, and they've looked at the stock market. They've read that stock markets, increased at a rate of 10% over a 10-year period, and the best time to get in is when a crash has happened. And they've had the benefits of ComSec and NAB trade, online trading, and they've got in there and they've bought quality assets. I don't think they're buying crap assets.
No.
They're buying the.
No, what's wrong with that? Yeah.
Exactly. What's wrong with that? And in fact, I wrote a piece today talking about how this economic growth story we're talking about earlier is really, really important. And I linked it to that Paul McCartney song, "Silly Love Songs." What's wrong with that?
Yeah.
I want to know. And I think a lot of people young people are seeing this as an opportunity to build wealth. And as long as they buy and hold quality companies, even if it's a second wave sell-off, they'll still make money over time.
So, I mean, the warning is, once it goes down, and it will, hold on to them, don't sell.
Yeah, but as long as you're buying quality companies, there will be a significant comeback over the next 2 or 3 years. It may well be earlier, but as long as you're buying quality, I don't see anything wrong with young people getting into the stock market.